How's everyone doing? Thank you very much for joining us here. We are here to talk about the interesting job and potential of blockchain and digital assets in Africa. I'm here with really exciting, some of the smartest people, I believe, in the African blockchain scene, right? So you're here to learn a lot and just really get insights into what is happening on ground there. So I'll let him just introduce himself. I'll start from my far left, Yele.
Hi, everyone. I'm Yele Bademosi, CEO of NestCoin. We're behind Onboard, and Onboard is an on-chain neobank for builders and creators in global majority markets. It's good to be here.
Lovely.
Oh, hi. Gwera, the head of crypto at Onafriq, which is not a crypto company, but a traditional payments company in Africa. We are the largest payment gateway with access to 500 million mobile money wallets, 200 million bank accounts, about 300,000 agents in Nigeria for cash in, cash out. And we also operate the largest prepaid card issuer processor on the continent as well.
I'm Tefiro Serunjogi, head of product at Cheaper Cash. We're an African fintech platform that offers a variation of services to our customers, right from prepaid cards to stocks, crypto, money movement, and the like. Yeah, happy to be here with you all.
Lovely, thank you. And again, I'm Oluwaseun Adeyanju. I am the founder of Mariblock. We are a research and advisory company. We're basically trying to help African businesses and even international businesses understand the business case for blockchain on the continent. Right, and I'll start with something. I think it's kind of an overflogged issue. We were talking about this earlier, and it's the question of, because when everybody thinks about Africa, when it comes to crypto, there's the very popular narrative of banking the unbanked and all of that. Tefiro, do you want to speak to that quickly?
Yeah, definitely. And I think, like you rightfully said, it's a tired trope, and then I think one that's being overused. The way I like to think about this is more about are people being served? Are they underserved or unserved? Reason being that bank accounts are no longer the requirement for access to services. You know, in my life, I have lived in places where people have bank accounts but still pay for their groceries with checks. If you ask me, they're underserved. My grandmother may have no bank account, but she trades crypto on her phone. She's being fully served, right? So to me, it's about, does the individual within their context have access to services that meet their needs for transaction, for money movement, for spend, etc. And I think thinking that way allows us to then think about what is the best solution to build in this context to meet that need. But if you make the bank account the primary goal, then you will miss a myriad of things that actually need to be solved and need to be addressed to fully serve that individual or their community.
Lovely. I mean, I think that is something that I'm really, that I try to communicate, and I love the way you put it. It's not so much about just banking the unbanked alone. And there is this popular kind of saying right now amongst builders in Africa, do the unbanked even want to be banked, right? You kind of find that, not really, they kind of prefer the way things are. It's not from a lack of options many times. But now that we speak about, maybe Gwera, do you want to talk briefly about, so, you know, what next? What should we be focusing on instead of, you know, this?
Yeah.
Yeah.
I mean, banking the unbanked is a great term to use in press releases and at the World Bank and in UN papers. Anyone in the room from these organizations, mad respect to you, but it's a tired trope. And at Onafriq, we focus on access. So access is really like a currency that means quite a lot. No one wants a bank account. Like, I personally don't want to, also as a recovering banker myself, like, I don't want a bank account. No one wants a mortgage, they want a house. No one wants a bank account. They want to be able to just, send value to someone who they owe money to, or pay for a service that they use. Ultimately, doesn't matter how it's done. They just need to get that job done. So in terms of what do we focus on, I think it's the principle of jobs to be done it comes in really well here, because as also a product manager, like, I think that thinking about the first principles of what it is people need to do, and for example, our colleagues on the stage today, Tefiro with Chipper, providing people with cards, which are powered by Onafriq as well. We see people use cards in regions where there's low card acceptance, but they're using it to access the globe, to access global e-commerce, simply to access Netflix, to access AWS. And we need to focus on those use cases and a little bit more about serving that so more people have access. So instead of focusing on banking the unbanked, or I think serving the underserved, but also providing access and giving people options where they can have them.
Lovely, thanks, Gwera. I love the word you use, access, right? I think it's really about everything. And when I think about my journey into this industry, it's all about access, really. And I think that's something I'd like you to talk more about, Yele, right? You wrote a blog post recently about like use cases you want to see, right? Can you talk about those things, like the way you think about, especially the African continent, access, and in terms of like real-world use cases that we should be paying attention to?
Thank you. I think maybe before I mention some of these use cases, would love to sort of just provide a little bit of context into some of the things I've been able to, or had the privilege to work on or build on the continent. So in 2016, I was lucky enough to have founded one of the first pre-seed funds on the continent called Microtraction. Currently have about 80 portfolio companies across 10 different African markets. And then I was also the first employee for Binance in Africa. So I remember when I joined Binance, like everyone was like, why are you, joining this company? Like, what is Binance? And if I asked everybody here, what is Binance? Everybody raised up their hand. And we went from pretty much maybe 5,000 African users to 30 million users in the space of a few years. After that, built a company called Bundle. It was sort of like a cash app for Africa of about 1.4 million users, before really deciding that I wanted to figure out how to find ways to drive crypto adoption. I think now we use the term bringing the world on chain. It's kind of like it's like how we were saying Web3, and nobody says Web3 anymore. But I gave that pretext because for the last sort of 9 or 10 years, I've primarily been building and investing in emerging markets around financial services, both digital and on-chain technologies. To be honest, I think, I got a DM yesterday where a young builder in the space was asking, like, what is the value of coming on chain, and how does that help the, it said the Nigerian economy. And what I said was that fundamentally, what blockchain technology offers is the ability for anyone, regardless of where they are, to be able to financially migrate into a better sort of economy and financial system, right? So if you're living in a number of global majority markets, you have rampant devaluation, double-digit inflation, sort of lack of access to credit. And to be honest, a lot of fintechs are actually doing incredibly well, right, across these various verticals. But the challenge for me is that, when you think about fintechs, it's quite siloed. So if you look at, let's say, Europe or the US, and you think about the credit, infrastructure, it's not owned by a single entity, right? So when you have fintechs building out credit solutions, they don't talk to each other because these are closed financial systems. So to me, when I think about the future of on-chain and this idea of the on-chain economy, it really is about taking world-class financial services, putting it on an open platform, the true open banking, and then, allowing that data to unlock access to the types of financial services that people wouldn't have had access to before. So fundamentally, having invested in, maybe about 70 fintech companies, I am quite excited about this. Very excited about credit. Very excited about identity. To be honest, like I think about the on-chain, the India stack, And I always say that like my dream is to figure out how to take the India stack, put it on chain, but make it completely open so that anyone, anywhere, regardless of where they are, can get access to, amazing digital infrastructure that allows them to live radically better lives. Thank you.
Lovely. Thank you very much, Yele. By the way, I forgot to mention this at the very beginning of this. If you have questions for our experts here, please scan the QR code up here, and that'll take you to the Slido app, so you can ask your question. Right. You spoke about, I hear you talk a lot about these access, like this use cases, credits, ID, and I think that's still like a very big issue on the continent. And I know you would know a lot about that, given your product is very consumer facing, right? What do you think about ID credit from like that blockchain perspective?
Yeah, I think like Yele put it, I think of blockchain as blockchain technology giving us another tool or another means to address the identification issue in Africa. So taking a step back, and as we were talking about this earlier on, one of the biggest challenges building in our part of the world is that you're building both the product and in many cases the infrastructure upon which a product sits, right? So something as simple as, I have an amazing app, an amazing technology. How do I onboard users? How do I confirm that that person is who they are? And then do so in a manner that my third-party partners across the world will also be comfortable, right? And in many places, that doesn't exist, right? So you're building both that infrastructure and the product. And so, when you think about what blockchain technology can do for us on the ID side, I think it really unlocks a faster means to addressing some of those fundamental issues that then will allow us to actually build the products that we know will drive value for our customers. But again, I think any person who works in our part of the world will tell you that more than half their job is building infrastructure, and the other half is building the product itself. And that's a very unique approach to building that I think many parts of the world don't have to face, and therefore, even how you deploy your resources, how you deploy your capital changes, right? Because, maybe in the US, every dollar of funding you get is going straight to the product you're building. In our part of the world, most of it is going to building infrastructure, and then maybe some to building the product. So yeah, it does present a unique challenge, but also a unique opportunity.
All right, lovely. When I think about this three guys here, I think they're kind of on kind of different side of like building in the space. Gwera, you used a description yesterday, millet in the front, crypto at the back. But Yele very much prefers it being crypto at the very front of it. Right. So how do you, what do you seem to believe that the real value of crypto on the continent will be just in the infrastructure layer rather than consumer facing? Mm-hmm. Because you enjoy telling everyone that your company is also not a crypto company.
Well, I say that because we have regulators who are very nervous about the C word. Well, so I do think that there's definitely room for the crypto UX to be front and center. Right now, where we are, it's not great, but it's getting better with consumer products like Onboard and others like Sling Money, if anyone may have heard of them. We're seeing real-world use cases that are actually using a good UX. But coming from the background I come from, which is traditional financial services and fintech in general, if you identify what's been done well, it's been a series of things that have also considering regulation, access to distribution, and then the technology itself. And fintech, especially in a country like the UK, fintech has done a phenomenal job to serve people, to give really good UX. So let's look at open banking, neobanks like Monzo. The access to credit in this country is just so. It's great. It's done quite well with regulators like the FCA being incredibly supportive of innovation. But behind the scenes, it's still a lot of stuff is run in spreadsheets, right? Actually, I often joke that a lot of Africa's hundreds of millions of dollars in Africa of OTC transactions are happening in WhatsApp, are happening across spreadsheets. It's really clunky. So I think that what we need to focus on, and I believe this, is that having the fintech UX principles be front and center, because we're not going to change behavior overnight, but still powering them in the back end with crypto. And for cross-border payments is the most obvious one. I'd like to see things like identity in Africa, where more people have phone numbers than they do have IDs, or they're more likely to have a phone number than an ID. Connecting an identification to a phone number, right? Having an ENS or a P phone NS. I'm not going to say that acronym. Something like that would make a lot more sense, right? So I think that if we look at email, let's look at historically. Email right now we all use it every day, but what does it do? We're communicating something to someone else. Years ago we would send letters or telegrams. And it evolved over time to where we have email. But at the time that email first came out, the people who were using it were calling it SMTP, right? That's the protocol in which messaging can happen over the internet. So at that time, 100% of people using SMTP knew what SMTP was. Today, 100% of people using SMTP have no idea. They are using SMTP over a really nice UX called Gmail or Outlook, if you're unfortunate as me to use Outlook. And we're going to see the same trajectory in crypto. And folks like MoneyGram are doing a lot to really abstract the complexity of clunky cross-border payments and things like that, treasury management, and using crypto to do that. But the UX, the UX is still traditional in the cash. But definitely there's room for side-by-side innovation of an onboard or a chipper can exist at the same time as a MoneyGram. So yeah.
And that's what we do.
And we do, and we all work well together.
Right.
So yeah.
Yeah, I was going to ask you because I know you're big on UX, and by the way, Yele's app is one of the most best UX, offers one of the best UX experience for crypto that I've seen. Yeah, do you want to talk more about that?
Yeah, so I think I'm actually more aligned with Gwera's position. I remember the first time Gwera said kind of like crypto mullet, or used that reference, and I really resonated with it, right? So actually, it's funny you talked about onboard, and the truth is we first went we're going to build on-chain. We're not doing anything else, right? And we've worked really hard to make the UX as good as it can be. But when you have so many networks, you have Stellar, you have multiple L2s, Solana, and you're building a self-custody wallet that supports all these networks, it's very difficult to build that UX, right? So we're actually doing the pincer attack at onboard. So we have onboard, which is sort of like a on-chain neobank product, and we recently launched something called Haven, which is essentially still, powered by stablecoins, but the front end looks completely like a neobank, and that allows us to sort of onboard people who want both sides of the equation. Now, one thing I would say though is that the quality of the let's use the word UX tech has actually increased exponentially, right? So the things that we can do today with an on-chain sort of wallet versus 3 years ago or 2 years ago are completely different, and it will continue to get better and better, right? So for me, the end goal is for an on-chain wallet to not be, from a customer experience perspective, to not be differentiated from what you would have with a cheaper cash or what you have with a cash app. The truth is that we're not there yet, but I do believe that within the next, probably the last part is something called chain abstraction. It's still pretty new. We started working on that already internally. And so probably by this time next year, I think a lot of the tech around chain abstraction will be live. Again, crypto, we like to use complex words, but literally all it is just having float positions on different networks, and before the bridge settles, you kind of send the asset to the end customer. So our advantage as a team is that we've built financial services before, and we're kind of just taking that applying it with on-chain technology and saying that, okay, if we build on-chain, we can have users in Latin America, Southeast Asia, India, Europe, Africa, even though we're like, initially from Africa, and that's kind of like what we're trying to build. So, yeah.
If I could just chime in, I think Braven, Onboard, and even Chipper present really unique opportunities. So who in the room has like a Monzo account or a neobank bank account? Anyone? Yeah. Do you just wish that your bank account could just do certain things? You're like, they have all this data about me. They have all this information about my money in, money out. I wish they could just, I could have a Swiss banker in my pocket. I wish when I get paid, I could have those funds be allocated to my student loan or to sending money home or to my bills without me having to intervene. And what you guys are building is definitely is paving the way for that kind of automated use case. So like, sorry to use buzzwords again, but crypto and AI present a really brilliant opportunity to do this kind of stuff that is going to revolutionize the way that people are banked and the way that they're served. Sorry, not banked.
Both.
Yeah, both, exactly. So I think that UX piece is incredibly important, and we should definitely keep holding each other accountable to that.
Yeah. Lovely. Thank you, guys. We have a few questions here, and I just want us to get to those quickly. And I'd ask you this because I think you probably... So it says the tech works, liquidity is there. Why hasn't a ubiquitous solution been developed yet for, say, remittances, right? What's the barrier in Africa? And maybe to add some context to this, I think that's one of the things that frustrate me personally. You come on Twitter sometimes, or somebody's saying, "Oh, I'm trying to send a large sum of money, right, from this country," and in my head, stablecoin works for this, but still, people tend to not be able to use it, right? So, what would you say is a barrier to like seeing, crypto-based remittances? Become like a big thing in Africa?
Yeah, I mean, I wouldn't use the word barrier. I would use the word the missing opportunity or the pending step to be taken, and that's heavily around regulation, right? And I know we don't want to get to that part of the chat, but regulation is a necessary part of the equation, and more so at scale. Mm-hmm. And in Africa, regulators, if you're in Africa, you're working 54 countries. Different regulators, different warmth or coldness towards crypto, and you have to get them on board before you can actually do an at-scale remittance program or money flow that is backed by a stable coin or by crypto. So the tech is there. It is the tech has not been easier or better, right? But we also aren't going to build products that are not in compliance with regulation, because that's a very quick means to the end, right? So I think it's about doing now the heavy lifting around how do you get regulators to understand the value of this technology, what it means to both their citizens, but also to their economies, and why it doesn't pose the threat that they may think it poses, right? So it's understanding what are their key priorities, right? In many places, the number one thing is how does this impact my currency's value and fluctuation, if at all? Right, so getting them to be at ease with that particular point is huge. Two is understanding how does it actually work. Are my citizens going to be put at a higher risk because now it's not a fiat, that it's not a bank control fiat that's on the back end. Again, all these things are oftentimes just educational gaps that you have to fill, but those discussions take a very long time. They're not a simple slide or a simple discussion. There are many players involved. All have to be brought to like a certain level of comfort before you can then take the next step of having regulation put in place to support that flow. So that, I think, is the biggest piece. The tech is there. I mean, the tech has always been there and will always be there. It's this final piece which I think always remains sort of the slow cog to turn.
Lovely. And maybe just to add to that, and maybe, I don't know if someone else would want to speak to that. I spoke to one of the builders on the continent, sometime last year for Mariblock, and he believes that the biggest, barrier to like something of having crypto-based remittances at scale in Africa is that the incumbents are not. It takes a big institution getting involved for that to really take off. Is that a position you guys share?
I mean, we are a big incumbent, and we're trying. I mean, MoneyGram is a big incumbent, and they're definitely. I think it's change happens at different paces in different places. I mean, it takes forums like this to bring us all together. But I don't know. Do you have any other thoughts?
No, I think pretty much, what both of you said. Yeah.
All right, great. Thank you. And there's this other question here, and it's interesting. How much do the use cases vary across specific markets in Africa, or are there consistent needs across Africa, the market? And I think this is maybe a good point to talk about. Last year, the Builders event in Ikoyi, there was this very part of that conversation that spoke to why a lot of the conversation in crypto right now and blockchain focus on fintech versus other use cases across other sectors and all of that. So, but then you still see pilot programs across Africa, right? What would you say to that?
Yeah, I think there's sort of two sides to think about that, right? If you're trying to build something that is going to serve multiple markets globally, then you need to find a unifying use case that applies consistently across these markets, despite their regional kind of diversity. And usually that is fintech, right? You also have, an incentive problem. A lot of investors, even in the Web2 or just digital technology space, most of the capital is in financial services. So you're going to see something similar in sort of the on-chain space until there is a breakout company or a breakout sort of sector that shows that it's possible, and then more capital will flow in. To be honest, I'm an investor, and most investors, we're not very smart people, right? We kind of let the entrepreneurs show us the way, and then we create theses around some of these things. So that's sort of how I see it. But on a personal note, I'm kind of trying to find what I call vertical financial services. That is what sectors, what's the overlap between interesting sectors and financial services, e.g. the creator economy, which is massive in Africa and in a lot of emerging markets. You have cultural exports, talent export, and what does that look like? Because there is a huge sort of underserved but large population in that. And it's something I'm personally passionate about. So, yeah.
Lovely. Just finally, Gwera, do you want to speak to the subject of use cases?
No, just the use cases are pretty. Let's just build the boring stuff.
Yeah.
Get people to do things that they want to do, that they need to do. We don't need to build complex ZK proofs or whatever. Just people want to move money, move value, and it'll happen no matter what. Just whether or not it's cheap or efficient is what matters.
Lovely, lovely. Thank you, everyone, for joining us. I hope it's been insightful for you. Thank you, everyone. Thanks, Yele.